This is ShadowQuant, Market Brief, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Tuesday, June 30, 2026, and this is the After Hours session. Now, let's get into it. The S&P 500 closed the second quarter on a high note, but the market's internal signals tell a more complex story. With the Nasdaq leading the charge and the Russell 2000 lagging, we are looking at a narrow, tech-driven rally that may not be as broad as the headline numbers suggest. Here is your after-close wrap.
Good evening. The S&P 500 tracked by SPY closed at $741, up 1.65% for the day. The Nasdaq 100 tracked by QQQ was the clear leader, gaining 2.49% to close at $724.08. The Dow Jones tracked by Diamonds added 0.76% to finish at $521.68. Meanwhile, the Russell 2000 tracked by IWM struggled, dropping 0.29% to $298.97.
A clear divergence between megacap tech and the broader market. Let's see if any corporate earnings could have driven this momentum.
There were no major earnings reports released today that moved the needle for the broader indices. However, the corporate filing desk saw activity. Prestige Consumer Healthcare, Janus Henderson Group, and Collegium Pharmaceutical all filed 8K forms, including amended filings, though specific material events were not detailed in the headlines.
Extreme volatility in the lower tiers, but the core market remained anchored by tech. Let's look at the macro backdrop that's keeping the Fed's eye on the prize. Macro data remains the primary driver of sentiment. The latest Federal Reserve data, as of June 29th, shows the Fed funds rate holding at 3.63%. Inflation, as measured by the Consumer Price Index for May, sits at 4.17% year-over-year, while core PCE is at 3.41%. Both figures remain well above the Federal Reserve's 2% target, maintaining hawkish pressure on the central bank. With non-farm payrolls on the horizon, the risk desk is watching for any cracks in the foundation. Spectre, what are you seeing?
The VIX, as of the previous session on June 26th, closed at 18.41, down 0.48 points. While this is a decrease, it sits within a 5-day range of 16.49 to 20.07. The key risk signal here is the disconnect between the VIX and the Crypto Fear and Greed Index, which is at 14 out of 100, indicating extreme fear.
A low VIX masking extreme fear in alternative assets and geopolitical tension. Let's look at what's next.
Here are 3 things to watch as we move into July. First, the Nasdaq 100 2.49% gain was driven by a narrow band of megacap tech. The disconnect between the QQQ's strength and the Russell 2000 decline suggests the rally is not broad-based. Traders should watch if this leadership holds or if the market rotates.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.